Hello and welcome everyone to another market commentary from StashAway. With us again, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hello, everyone. Hope you're well.
Yeah, I'm good. How about yourself?
Well, I finally did a trip to the office yesterday on
That's,
approval.
that's pretty good. Yes, I was able to go for a few minutes too. I know we didn't see each other, but we crossed over. But anyways, yes, good to get out every once in a while now. But with that being said, I think we have quite a lot of topics to discuss today. So I want to keep it not too long for everyone, but one exciting thing that's happening at StashAway is we'll be launching our first podcast, and the podcast is called In Your Best Interests. It's you can find it anywhere where you usually listen to podcasts, like Spotify or Apple Podcasts, Stitcher. We have some really incredible, guests and topics that we're going to be talking about and talking with in episode 1. Actually, I'm actually joined by Freddy himself. We talk a little bit about his upbringing. We also demystifying some common investing myth as well. So if you're excited for this, if you want to take a look at it, you can subscribe to it in the description below the video. I think we're going to put a link. Otherwise, you can again search for us on Apple Podcasts and Spotify as well. Or if you want to learn more about it, or you have any questions, again, put them in the comment section below so that we can get to them. Freddy, with that out of the way, I think there's the last couple of days there was a lot of talk in the market, chatter again, driven at the beginning by Peter Navarro, right? Telling someone that the US-China trade deal is over, and then Trump coming in to rescue everything again. What do you make of that?
Yeah, I think it was on Monday, very early morning for us. It's Sunday evening for US, if I'm not wrong. And there was some confusion on US-China trade deal again. I think it was a lengthy TV interview where because the questions are lengthy, and the questions were directed at is the US-China trade deal still going on, and or some aspects of it, is it over? I think it wasn't interpreted properly. Peter Navarro just said, yeah, it's over. But the way he said it is like it's over. It could be like, could it be barriers to the deal is over? You finish negotiation, or it doesn't mean that the deal has ended, right? So there's been some sort of a misquoting by the media. As you know, how they like to put in the headline is very inflammatory, and it created a huge drop in a lot of the futures markets. It created a drop in Aussie versus yen, for example, is a good proxy for markets as well. And that was quickly averted when Trump, via the power of Twitter, came in and said the US-China trade deal is intact, fully intact. That there's no over, right? So that rescued the day.
Yeah, rescued the day and had the market up last night, right? So which was Tuesday for
But
people.
it goes to show that even though the virus counts keeps going up, right? You've seen the reopening. Mexico has got 6,000 plus cases in a day. You got Japan also started to surge. That didn't deter the markets. However, the market is very focused on the US-China trade deal.
Yeah, and I think that really brought that back to the attention, right? So because how impactful the trade war is compared actually to the coronavirus, you're right. With talking about the coronavirus already here, the case counts in the US, right, and Japan, etc., it's been like on an explosive trajectory lately, right? Especially with more and more reopenings in the US. Now, I think Apple stores are already closing in certain states again. Do you see this second wave or a part of the first wave still not being contained a problem going further or not?
I think it's a very natural thing to have some more cases when you reopened. Like you look at Beijing, they have quickly shut down all schools again, and they started to tighten the grip in Beijing itself, and very instantaneously right after releasing the circuit breakers. So we could very well see even Singapore doing the same. So there's no telling if the second wave is the end of the first wave is ended. That's not sure yet. So vigilance is there. I think Singapore, there are There are health professionals observing the situation in restaurants as well, and just to see whether behaviorally are people still doing the right safe distancing when they are in that setting. I wouldn't be surprised if things don't go well. Let's say you have 20, 30 cases in a few days in Singapore itself. We could very well go into another circuit breaker. So folks out there, stay vigilant.
Yes, definitely stay vigilant. I think we'll get some good data over the next few weeks also from Europe, because the borders are all completely open again between the European Union, right? So let's see how that impacts numbers over there as well. Let's move on before we get to the questions we got from users last time around. Is China making people now sign documents, right, certificates on their shipments coming into China? This could also be something that is going to be implemented by many other countries as well, probably, right? So that their shipments are not contaminated. How do you see that, especially with the US-China trade war again, right? And China saying, "Hey, we're buying this much soybean, right? We're buying this much of meat or something." How does that impact that?
Well, there's a lot of mistrust on China's intention, because in the past they overused this tactic to delay any trade agreement. Soybean was one example. But it is true this time that the US meat plants and factories, they have a lot of cases for coronavirus. It's true. And although health professionals do not think that the coronavirus is foodborne, but it's not really proven, but they don't think so. But China is taking extra precautions here, but that could very well be seen as yet another Chinese tactic to delay meeting up to their obligations in the trade. So there could be some more noise on trade. It's not going to go away. We have an election in November, so China bashing is going to be there.
Yes, it's at the forefront of his mind right now, apparently on all his Twitter's feeds. But anyways, yeah, thanks, Freddy, for those updates on the market. I think they really put things into perspective for our listeners. Let's move gears and let's go to user questions, right? I know you have them in front of you too, because they were very lengthy. So I'm trying to condense them a little bit. But the first one was from Wen Zheng, right? So he wanted your opinion on some of the ETF selection, because he thinks that by selecting an ETF, right, it's a basket of stocks. Some part of the ETF will be benefiting from a post-COVID world, in his view, and some part of the ETF will not benefit, right? So isn't it time now to be more selective or more actively managing, more on stocks than ETFs, because you can pick the winners versus the losers of this post-COVID world? And I think you can take it from there, right?
Well, I think it's actually not straightforward to just say airlines are loser forever and restaurants are loser. They are the bigger losers so far, but the future nobody can tell, because the market is forward-looking. The moment you have a vaccine that has good efficacy, we don't yet have one. We have a few candidates. But if we have that, suddenly the market will price it completely reverse, where the COVID-impacted names, the severe ones, suddenly get a lifeline and it flips around, right? So it's very hard to run a portfolio based on one view, which is COVID or not. And so in this example, I think the example was XLY, which is consumer discretionary. About 48% of that is Amazon, Walmart. Both are different businesses, but both have benefited from COVID, because they have a solid business. They are inelastic demand, right? Like groceries is still open.
Great e-commerce, right? Yes.
And great e-commerce, Amazon. So you got a good balance there with half of the ETFs. The other half, some of them are affected, some are not. It's hard to tell because there's so many names in the ETFs. But just looking at the line items, very balanced between COVID impacted and COVID benefited, right? But what if the COVID situation turned around because of vaccine development that has great efficacy? Then one side will flip to the other side, but you are neutral to that factor. So that to me is great long-term portfolio construction. In addition, sorry, apologies. In addition, you also got to look at the overall portfolio, right? If you have a balance or even a lower risk portfolio, you have other protective assets that's working against any losses in XLY, for example. So I would strongly think about it as a portfolio aggregate level, right? In the case that where you have a very high-risk portfolio, is all mostly growth-oriented assets. But even then, as you know, StashAway has reoptimized last time when we actually, even the highest risk portfolio has a very strong amount of gold, which was designed to protect you against the US dollar depreciation, but also at the same time from further crashes. So a good portion of those things have been offset by some protected assets, right? So it's hard to just say this line item, this is it. There's other things that's going on in the portfolio.
Yes, agree. So hopefully, Wen Zhang, this was helpful to you. If you want to, if you want to ask a follow-up questions, happy for you to do so. We can pick that up at any time. Let's move on to Andreas Bernick's question. And his is around dollar cost averaging into market, right? So people making monthly contributions or weekly or whatever into the market, and how that is affected by portfolio rebalancing, right?
Yeah.
Do you want to take it from there then?
Yes. Well, if the market doesn't move, let's say you have a simple portfolio, right? 60% A and 40% B, and the market doesn't move, it's great. Your new money that comes in to do as part of your dollar cost averaging plans, your new monthly contribution will come in, and you will split the new $100, 60 goes to A and 40 goes to B, so that the whole portfolio will always be 60% in A and 40% in B, right? So far, so good?
Yep.
Yes. However, in reality, maybe by the time you contribute new cash, there's a big movement in the markets. So Andrew's question probably is related to how we are actually going to invest that new cash when there's a need to rebalance at the same time. So let's say the market moves such a way that A has outperformed B a lot. So it's gone from 60% of your portfolio to 70%. And so you have too much A. You need to sell $10 of A to bring it down to 60 and buy back $10 of B. So it goes back to 40, right? However, that can be done by the new cash. What we are saying is that your new cash, the StashAway algorithm would think about the need to rebalance, and at the same time, the new cash. So let's say you need the first X% of your new cash will go directly to rebalancing that right away. Whatever is left will be further split to 60% A and 40% B. So what it means is that the new cash is first used to rebalance the portfolio right away. And whatever is left over in the new cash, we will split it according to the 60-40 in the plan, and so that you will always have a plan, a portfolio that's directly aligned with your target allocations. I hope I don't confuse further, but I hope I just...
No, I think it makes it really clear. And again, Andreas, if you have have a follow-up question for Freddy on this, please feel free to post it under the video, or you can also reach out to our support team. Right? They're also happy to take this further. Thanks, Freddy, for that. With that being said, we're running a little bit out of time, but I do want to squeeze in our next upcoming webinars for everyone. We have two again, both in Singapore as well as in Malaysia. In Singapore, it will be on July 2nd. That's Thursday next week, 7 p.m. What is your do you have a financial plan B? So we're talking about trust, estate, wills, insurance planning, etc. And in Malaysia on July 1st, we have a webinar on how to invest the right way with ETFs. For both of those, the links are below the video in the description, so you can sign up straight from there, or otherwise you can also sign up from our website or our Eventbrite pages as well. Thank you, Freddy, for being with us. Thank you, everyone, for listening. We are back with you next week. Until then, have a great rest of your week. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.